Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, Market Watch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By for September 13th, 2019. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Investment ideas in these podcasts are generally gleaned from market participants in the US, Canadian, UK, European, Asian, and Australasian financial markets. And Google any terms that are unfamiliar to you. Also, you can find a full transcript, live links to content, and often bonus material to these podcasts at the episode's podcast page located at investingforthesoul.com/podcasts. Now to this podcast. Well, the US Vegan Climate ETF finally debuted on the New York Stock Exchange on September 10th. First day's trading saw OK action hovering around its initial price of $25 a share and continued that way on September 13th as I'm recording this podcast. What disappoints many vegan-vegetarian investors is that the ETF doesn't appear much different from the regular mainstream big cap ETFs. However, as the promoters of this ETF point out, there are few pure vegan vegetarian stock plays, and the ones that are out there are small. Also, to get a well-rounded stock ETF, it had to include big cap S&P 500 stocks. Furthermore, because of its structure, I suspect its returns could be similar, or hopefully even a little better, than the S&P 500 ETFs more generally. For a good overview of this ETF, see Brenton Garen's post, Vegan ETF, VEGN, debuts on NYSE on ETF Trends. Quoting Mr. Garen's post, appearing on Fox Business Network's Varney and Company on Tuesday, Beyond Investing CEO Claire Smith discussed the fund with host Stuart Varney, saying that, "We are taking out about 43% of the S&P 500, Smith said. "We are adding in some of the mid-caps that are more forward-thinking, like Beyond Meat and Tesla, in order to make up some of the differentials in order to compensate for the things we are taking out. And generally, the Beyond Investing US Vegan Climate Index is a passive, rules-based index of US large-cap stocks, screened according to vegan and climate-conscious principles." End quote. By the way, if as an investor with closely held personal values, you feel uncomfortable with this and other fund options out there, there is another simple way to invest while more closely aligning your investments with your values. Check out my 1-hour do-it-yourself ethical sustainable investing pays tutorial. Go to investingforthesoul.com/podcasts and look down the right-hand sidebar for the link. Now, I often reference the Motley Fool, as that site has great contributors writing about ESG stocks. And again, I want to draw your attention to some of the research there. Appearing under the title, 3 Top Renewable Energy Stocks to Buy Right Now, 3 Motley Fool contributors review their picks. However, I'll only quote 2 here, as the third pick was already covered on my August 16th podcast, where Travis Hoyam picked SunPower. His 2 colleagues made new choices in addition to the ones they chose that appeared in my August 16th post. Rich Smith picked TPI Composites, and John Bromos chose Terraform Power. Rich Smith, commenting on TPI Composites, said, quote, shares of windmill blade maker TPI Composites crashed hard in August after the company reported an earnings beat, but also made a big reduction in its guidance. With roughly 40% of its production lines for windmill blades either still spinning up or in the process of being retooled to produce new models, TPI is currently operating 30% under full capacity. However, from a loss this year, analysts forecast TPI will grow to earn more than $4 a share in just 3 short years, and that TPI Composite stock won't stay this cheap for long, he says, end quote. John Bromos has this to say about his choice, Terraform Power. Quote, Terraform Power is a green energy stock that pays a dividend. Most renewable stocks are too young and focused on growth or just too cash poor to swing a dividend. But a handful of them, mostly renewable yieldcos, do offer dividends, and Terraform Powers is one of the best, currently yielding about 4.6%. Terraform looks like a buy for dividend investors and green energy fans alike. Incidentally, Wikipedia's definition of a yieldco, quote, is a company that is formed to own operating assets that produce a predictable cash flow, primarily through long-term contracts, end quote. Another Motley Fool contributor, Max Chatsko, wrote a related post titled 2 Top Renewable Energy Stocks to Buy in Wind Power. He likes Next Era Energy and Excel Energy, saying that they have a combined 25% of the installed wind power capacity in the United States. Elaborating on these companies, he says that, quote, Next Era Energy generated more electricity from the wind and sun than any other company in the world in 2018, and that Excel Energy doesn't directly own nearly as much wind power infrastructure as NEE, that is Next Era Energy, but it leans on a mix of power purchase agreements, PPAs, and direct ownership to support 9,300 megawatts of installed wind power capacity, and plans to increase that to 11,100 megawatts by the end of 2021, end quote. Now, it's becoming well known that millennials are eager for ethical and sustainable stocks. Addressing that issue, Awantika Podar of Zacks wrote a piece titled Top-Ranked Stocks Suitable for Millennials, 6 picks, and the article also appeared on Yahoo Finance. Though its recommendations are for millennials, I don't see why many of them wouldn't be applicable to most investors. So here are her 6 picks. She writes, 1. Keysight Technologies sports a Zacks rank number 1 and a growth score of A. The stock has returned 54.4% on a year-to-date basis. Further, the company has a long-term expected EPS growth rate of 10%. Her Her second pick, Annixter International, she says, flaunts a Zacks rank number 1 and a growth score of B. The stock has returned 10.7% on a year-to-date basis. Further, the company has a long-term expected EPS growth rate of 8%. The third pick, Cirrus Logic, has a Zacks rank of number 1 and a growth score of B. The stock has returned 60.4% on a year-to-date basis. Further, the company has a long-term expected earnings per share growth rate of 15%. Fourth, Symantec Corporation has a Zacks rank number 2 and a growth score of A. The stock has surged 23.4% on a year-to-date basis. Further, the company has a long-term expected EPS growth rate of 6.9%. 5. Microsoft has a Zacks rank number 2 and a growth score of A. The stock has appreciated 35.3% on a year-to-date basis. Further, the company has a long-term expected EPS growth rate of 11%. And finally, her last pick, 6, Alphabet, has a Zacks rank number 2 and a growth score of B. The stock has returned 13.1% on a year-to-date basis. Further, the company has a long-term expected EPS growth rate of 17.5%. End quote. One of the great heroes of sustainable investing is Al Gore, former Vice President of the United States. He helped create Generation Investment Management, an investment firm to invest in sustainable companies. Well, Ryan Vanso posted an article on Guru Focus titled, Al Gore Loves These 3 Stocks. The 3 stocks that Al Gore purportedly likes are, quoting Mr. Vanso's post, Jones Lang LaSalle, Inc., which comprises 4.1% of Generation's portfolio, but is more than 14% of the shares outstanding of the company. Generation's stake is worth nearly $600 million. Jones Lang LaSalle is a US-based commercial real estate services firm. The stock trades at just 11.3 times forward earnings and looks like a reasonably priced stock with a large moat. End quote. The second pick is Acuity Brands, Inc. Quote, Acuity Brands comprises 3.2% of Generation's portfolio, but the firm owns roughly 8% of the entire company. Generation's stake is worth around $460 million. Acuity is a lighting and building management firm. It's based in the US, but has operations throughout North America, Europe, and Asia. The stock trades at just 12.9 times forward earnings, yet consensus estimates call for a 10.67% long-term annual earnings per share growth rate. This could be a bargain if growth estimates become reality, he says. End quote. The third pick is Nutanix, Inc. Quote, Nutanix is a new holding for Generation, currently comprising 2.6% of the portfolio. The stock is down 42% on the year, so don't be surprised if the firm adds to its positions if the valuation continues to fall. Generation now owns 7.7% of the company. That's a $375 million position, nearly 10 times the trading volume. Nutanix is a cloud computing software company that sells hyper-converged infrastructure appliances and software-defined storage. Over the 5 years, revenues have grown by an astounding 57% per year. Year over year, however, sales growth has slowed to just 7%. That's caused a steep sell-off in shares. Part of the issue, he says, seems to be a misunderstood pivot to subscription and SaaS, that's Software as a Service, revenue streams. Revenue growth slows as customers are transitioned to the cloud, but long-term retention and profitability may rise. Generation seems to be capitalizing on the temporary confusion. End quote. So these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcasts and scroll down to this episode. And be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally, and help us create a better world for everyone. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else related. A big thank you for listening. Come again. And my next podcast is scheduled for September 27th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.